Hello and welcome to Livewire Markets Buy, Hold, Sell. I'm Anna Dadic. While the word quality has many facets, for most investors it means a strong competitive edge and strong returns. So which companies on the ASX exhibit these traits? To answer that question for us, I'm joined by Will Granger from Airlie Funds Management and Marc Whittaker from IML. Thanks for joining us. Let's dive in. First up, we're discussing diagnostic imaging business Integral Diagnostics. Marc, is it a buy, hold or sell?
It's a very strong buy for me, Anna.
Okay.
So one of the leading radiology businesses in the country. When we think about the ageing population, the demographic that's moving into more acute healthcare, diagnostic imaging is a key service there. And I think the beauty of diagnostic imaging over time is it's become more of a early stage form of intervention in healthcare as opposed to a later stage. So people, before they're getting too sick, identifying issues with their health and addressing that. So it actually saves governments and insurance, health insurance companies profits at the same time. So I think that's quite good. Has an acquisition with Capital Health, it's just acquired that business, which puts it into the second largest provider in the radiology space. It's got scale, it's got a regional footprint predominantly, but when we think about regional areas and the levels of competition in radiology, they're actually quite a degree less. So I think the company's really well placed. Balance sheet's not too bad, it has grown by acquisition over time, but we think given where it's positioned today and the outlook for the business, we think it's really well placed and very attractively priced. About 8 times EBITDA on the integrated earnings with Capital. When we think about acquisitions in the space, particularly through private equity, we're seeing deals go at 12, 13 times EBITDA. So this is a business that's is effectively on sale, but very high quality.
Okay, Will, how about you? Is it a buy, hold or sell?
Yeah, for us it's just a hold. As Marc suggested, I do like those sort of longer term thematics around an ageing population. And I think if margins can recover towards pre-COVID levels, I think you can make some really good money out of the business. But for us, I think the balance sheet's a little bit too stretched and we have some concerns over sort of the cash flow conversion. So that keeps us on the fence, just to hold.
Okay. All right, next up, we're discussing intellectual property services business, IPH Limited. Will, staying with you, is it a buy, hold or sell?
Yeah, it's another hold for us. It's got a solid track record and it's a capital-light business, so it produces a lot of cash flow. But we don't typically like businesses that are this acquisitive, particularly when they're buying people businesses. Obviously, there's a risk that you go and buy one of these firms and then the partners leave and once they're out of escrow and start their own competing firm. And I think it's just a hold for us.
Okay, Marc?
I agree, it's a hold, and predominantly because of the acquisition strategy that they've had over time, where I think it's really the quality. We talk about quality, I think the quality of the business isn't what it once was, given those acquisitions in Canada predominantly, where it's really stepped out of its comfort zone a little bit. So for us, despite what looks like a reasonably good valuation, for us it's just a hold.
Okay, we'll shift gears now to mining services. Mader Group, Marc, is it a buy, hold or sell?
It's a hold for me. I do like companies that tend to dominate niches, and when you think about Mader Group and the provision of diesel mechanics in the mining space and other industrial services spaces, that's a nice little niche to be dominating. So I like that. I like the fact it's founder-led, but it's just expensive. It is a contractor at the end of the day, and I think you're paying the multiple that you're paying for it currently suggests that it's something more than just a contracting business. And as I say, at the end of the day, that's all it is. So we'd like to own it, but at a much lower multiple.
Okay. Will, how about you? Buy, hold or sell?
Yeah, we think it's a buy. There's a lot to like about the business. It's founder-led. It's got a very long track record of generating great returns on capital employed. And we think they operate in a part of the mining services sector that's a lot more resilient than people give it credit for. They've got a North American business that has had its ups and downs, but long term looks like a really exciting opportunity, and we don't think that's really captured in the price, so it's a buy for us.
Okay, sticking with another founder-led company, one of the highest quality retailers on the ASX, arguably in Australia, Nick Scali. Will, sticking with you, buy, hold or sell?
Yeah, it's a buy for us. We own Nick Scali in the fund. As you suggested, it's been a great business, phenomenal track record. We think you're not paying too much of a premium at these levels above the value of the Australian business. So we think you're getting pretty close to a free option in the UK. And obviously, overseas expansions can be questionable, but you've got a management team there that have proven they can create value through acquisition. So it's a buy for us. Okay,
Marc, same for you. Buy, hold or sell?
It's a hold for us. So interestingly, Will talks about the growth strategy, and I'm just a little bit sceptical about how that's going to play out, particularly in the UK, where I think in in Australia, Nick Scully's built a really good position in terms of the go-to brand for sofas and lounges and so on, and does have a premium sort of aura around its business here. Whereas offshore, I think that's a much harder sort of position to capture. And knowing as many English people as I do, they tend to be a little bit tight. So I'm not sure paying $4,000 for a lounge is the way to go. But I'm just a little bit sceptical on that. But I think it's definitely a hold, a good quality business. I think 25 times just gives me pause for thought a little bit in terms of when is the right time to own it.
Sure, okay. Now we will round out this part of the episode with perhaps a little known payments company called Kuscow. Marc, is it a buy, hold or sell for you?
So Kuscow is really a player in that digital payments infrastructure space. So digital payments are growing. Kuscow dominates the space in the non-big four bank space. So they've got about 25% share in that part of the digital spend that isn't part of the big four banks. So really good position, debt-free balance sheet. Trading on about 12 times earnings, so really well placed, good balance sheet, optionality around M&A to grow its share again in that space. Good management team, long track record, really cheap. It's a very strong buy for us.
Okay, Will, how about you? Buy, hold or sell?
Yeah, it's just a hold for us. We like some of the defensive qualities of the business. It's got an infrastructure-like skew to it, but they need to hold a lot of regulatory capital, and that kills a lot of your returns in the business. So I think ostensibly it is cheap, but given the lower returns in that business, it's just a hold for us.
So we've just run the ruler over 5 names on the ASX, and I've also asked the guys to bring along a stock pick of their own. Will, what's your pick?
Our pick is Sigma, which has recently merged with Chemist Warehouse. We've talked a lot about quality and competitive advantages, and it's hard to think of a business on the ASX that has a stronger economic moat than Chemist Warehouse. And what's quite unusual about the story is that it's still relatively nascent in terms of its rollout, not just internationally, but also in its core market of Australia. So that's a strong buy for us.
Okay, excellent. Marc, last but not least, what's your pick?
I really like Cleanaway. A little bit boring and predictable, but that's exactly why I like it. So one of the leading players in basically the waste services industry in the country. Dominates in the collection space. I think about your curbside garbage bin being picked up by the local garbage truck. They have a very strong market share in that part of the business nationally, but also in the post-collection side. So once they pick up the waste, where does it go? What happens to it? What do you do with it? So when we think about the circular economy and the emphasis on recycling, the emphasis on waste to energy and so on, Cleanaway is a pivotal player in that space. So really starting to dominate. Making very little subtle acquisitions here and there, which are just adding to the capability on the business and on that post-collection side, which I really like. I think Marc Schubert and the team there are doing a really good job at, again, reinvigorating that business and giving it a bit of a cultural change and really focusing on returns, really focusing quite specifically on CapEx and where that CapEx is going and what are the returns on that CapEx.
That's all we have time for today. If you enjoyed that episode of Buy, Hold, Sell, make sure to give it a like and don't forget to subscribe to our YouTube channel where we release new content every week.